Hi, my name is Mark Bernard. I'm a monetary economist. In this video, I want to talk about the Russian ruble, the US dollar, and Yuan, the Chinese currency. I'm here in a square. It actually says Skver Volne Ukraina, the square of free Ukraine. And down there is the Russian embassy, and across from that is some free Russian flag and monuments. I was probably going to film it there, but the police presence is a little bit too high. And I asked the nice lady, and so I'm going to film it here. But perhaps it's even better, because here I am in the square of free Ukraine, and I'm going to talk about the Russian ruble and how it's going down and the Russian economy, and this is not going good for Russia. But I'm going to back it up because I'm a monetary economist with specific evidence and real data and things that you can nod your head yes because the theory makes sense. So first thing I want to do is talk about, before I talk about data and economics till your eyes glaze over, I want to talk about, there's a show by Disney, believe it or not, called Once Upon a Time a few years back, I think about 2018. And one of the premises was the kingdom, the magic kingdom, the beautiful land was coming under a dark course. And the evil queen initiated this. But when all was lost and you could see this cloud, this darkness approaching all the people in terror and fear, Snow White turned to the evil queen and says, "You've lost. I know it now." At the darkest moment appearing, the history was already sealed. And that's the same way it is with the Russian ruble. So let me explain. One of my claims is, as a monetary economist, that money is the second half of every transaction. It has a systemic effect across all markets. So if the market for tulips is in disequilibrium, it affects the tulip market. If the market for potatoes is in disequilibrium, it affects the potato market. But there are nice complements and substitutes. If the market for cars, let's say a specific brand, is in disequilibrium, it affects that car market. And even with oil, okay, we can say there are substitutes and mitigations. But if the market for money is in disequilibrium, it has a systemic effect across all markets becoming disequilibrium. It's based on supply and demand, because you trade something. I bought this jacket for money. I buy this camera for money. You might buy a flat, an apartment for money. It's the second half that you barter it out for. Instead of using barter because of the double coincidence of ones, we use money as a store of value, medium of exchange, unit of account. And I've gone over this. And that is the cornerstone of Austrian theory business cycle, as well as Stockholm theory. And now they break it down, of course, into interest rates, the natural rate of interest versus the bank rate of interest, because money and currency, let's say M1, is not as used as it was thousands of years ago, 100 years ago. This market rate versus natural rate is the intermediary measure of disequilibrium in an economy. So right now, you can see symptoms of a monetary disequilibrium in the ruble 100% because of, one, a stage 4 decline in technical analysis, and two, high volatility, very high volatility. Now, right now, you may say, well, it's bounced back up towards resistance, 0.0095. They broke the other resistance, the support at 0.009, all the way to now 0.0088. And the Russians said, well, we're not going to intervene. But they are intervening. They are. What they're doing is selling Chinese currency every single day. I think it's like $54 million a day. It comes out to be like 2.3 billion, 2.4 billion a month. That's a lot of money that they can't afford just to prop up their currency. Why are they doing this? I believe they're doing this because the kiss of death for every currency or country economics is a bad currency. My first claim is money is systemic. It's the second half of every transaction, and disequilibrium in the money market creates disequilibrium across all markets. My second claim is this. Economies that have strong, stable, solid, low volatility, I want that currency, I trust that currency, are usually founded on strong economies, no matter what is said in the news. Current countries that have weak currencies, whether it be Zimbabwe, the poster child, Venezuela, where they eat rodents, or Argentina, usually there's something wrong with that economy, right? If you can refute me on those two claims, I challenge you. Basic economics, basic challenge. So the ruble, they don't want to seem as weak as they are. In my last video, I said their GDP is about an eighth or a fraction of what they actually claim on the macroeconomic level. I think it's like 450 billion, and that can't support a budget or any kind of major currency support. What they're trying to do is saying, and it's totally sarcasm, Russia big, Russia strong, support the ruble until the next administration comes in Washington, and maybe there's some hope that they'll be seen as strong. But of course, we know that's not true. So the ruble, they're trying to support it, and they're blowing their bank wad, all their cash, trying to keep it up, maybe up to the new resistance level 0.0095. We'll watch it over. But remember what I said, in order for a stage 4 to transmute into a stage 2, which the price of the asset is above the 200-day moving average, there has to be a long plateau, longer than actually the stage 4, which has been going on arguably for 15 years. Some guy on my blog, he's writing me and he's like, well, should I invest in the ruble? He's like, I think Russia will recover someday and the ruble will be worth something. How do I invest in that? Wow. I'm sorry. What are you talking about? I mean, there's more chance that they'll revalue their currency or the country will go away. This 500-year anomaly, this nightmare called Moscow, Russia, probably might just go away. And maybe that embassy down will become like a, orphanage or something down there. Let's hope. The Russian state as it exists is an anomaly. The monetary decline is a symptom of an ailing economy dying. They're buying Chinese currency, but what's happening with the Chinese currency over the last month since they've been buying it? The Chinese currency has been mirroring the decline of the ruble. I am a monetary economist. I watch these things daily. I am on the tape. The ruble is going down stage 4. The Chinese currency is going down stage 4. It's because the sanctions on financial institutions, they are being checked and double checked because nobody wants to be in the bad graces of the huge markets of Europe and America. Even though it's not the largest percentage, ultimately, you can't just trade oil for something and not be participating in this world economy. So you might say, well, the United Arab Emirates, Chinese currency, trade currencies like that are important, they're significant, they're rivals. No, they're not. What are the top 5 currencies in the world? Anybody know? Number 1 currency that everybody trusts, everybody uses, no matter what you say, is the US dollar. 88% of FX transactions are the US dollar, and you can take that to the bank. The euro is 32%. The Japanese currency, the yuan, is 17%. Great British pound is 13%. The Australian dollar is 6.8%. Those are the places I want to live. And you may say, well, that's not even adding up to, that's almost 200%. Correct. Because remember, FX has 2 sides of the transaction. But my point is, the Chinese currency is not there. The Russian ruble is certainly not there, and no other currency. I want to live in Europe. Great places in Europe. Beautiful Poland, Scandinavia, Britain, America. I want to live in these great countries. Australia. I mean, even in Japan or something now. These are just places with high life expectancy, high culture, peaceful place, wonderful, beautiful places that you can raise the next generation. And that's what it's about, making this world a better place. Chinese currency is non-existent. And again, Russia, like China, can claim big, strong country to the world, but I don't want to live there. I think that Chinese, let's say China has, plateaued out at like $15,000 a year. U.S., you can say, well, U.S. economy is plateaued too. The household incomes, like $80,000 a year. Okay, or whatever the Chinese number is. I'm not big on aggregate numbers right now. You say, oh, let's use the McDonald's index. Okay, let's say the currency market is all rigged and, the Bitcoin, and we can never tell which way is which. But there's something called the McDonald's index. It's a pretty good index. I think The Economist magazine used to put it out. It was pretty good in its day. And you compare prices of like the McDonald's Big Mac in one country next to the purchasing power. Oh, I'm sorry. Russia confiscated the assets of McDonald's when, stole it. And they have something called Tasty and Better, which I hear is just like, basically, I wouldn't give it to my dog. So we can't even use the McDonald's index. Okay. They don't even have McDonald's. Okay. So that shows you that there's something major wrong with the Russian economy. But back to the seriousness of this, technical analysis using the 50-day and even simple moving average, 200-day. I'm not getting into vector autoregression models, which I love to get into. Please let me get into this. And developing these huge models. The simple moving average, the tape, it tells everything you need to know. And this ruble is in a stage 4. They can prop it temporarily at billions and billions of dollars a month just to keep it within a resistance band. And that's probably until the next administration takes over in DC. Viktor Orban is interfacing with that administration. I mean, what does Viktor Orban have to do with the United States? He's like a poodle or something, right? Of a despot. Maybe there's, I don't know, cryptocurrency. I don't know. So these sanctions are getting tighter and tighter. They're very serious. If there's anything going around, I've seen these terms, sanctions relief or peace. Again, that's probably all AI-generated bubbles and keywords that's just infiltrating social media, et cetera, et cetera. Ignore the news. Ignore that social media buzz. Information is the lowest form of knowledge. Look at the tape and the trend. Stan Weinstein, read his book, How to Make Money in a Bull or Bear Market. I'm not recommending it specifically, no affiliation, but it is. And look, I'm an academic economist, top universities, doing top academic research. I still think it's of value. Moving averages don't go away. The future is embedded into the price, and the price of the ruble is going down. They're trying to prop it up at the cost of billions. They're not going to be able to do that. The Chinese economy is going down, simultaneously paralleling. They're like the Romulans and the Klingons, probably the Klingons being, the bad version of the Klingons being Russia, and the Romulans maybe a little bit. They're just both going down. They're out of control, like two inebriated people on a ski slope or something. So if they're trying to save the ruble by buying or selling Chinese currency, good luck to that. What Ukraine has to do is hold strong and just believe in the idea of freedom of market, transparency, democracy. And with time, that will prevail because good always wins over evil. My name is Mark Biernan. I'm a monetary economist. Have a great day. Thank you very much.